Okay, so when we left off, we recorded all of these closing transactions. We performed the journal entries needed in order to get the balances to where they're supposed to be. And then the last thing you need to do is create a new trial balance. So this is going to be your final trial balance. It's not going to include any revenues or expenses. It's going to include all the balances of your balance sheet accounts, and you can see that the capital account is going to be updated where it says the 33,585 under capital. See that? And then the new totals is going to be 43,045 for debit and 43,045 for credit. So if you think about it, that formula, L equals A plus OE, A equals L plus OE. When we did all those closing entries, none of the assets changed, right? None of the liabilities changed. The only thing that changed was those owner's equity numbers. And if you recall, back in the first chapter, they explained to us that OE is truly capital minus drawing plus revenue minus expenses. So all we did with those closing entries is add all of those counts together and put the balance in the increase or decrease in the capital account, the main capital account. Okay? So we took our revenues, we subtracted our expenses, we subtracted our drawing, we added it to our previous capital account, and then we came up with our new capital account. So the OE is what changed here, and that's the 33,585. So all of those revenues and all of those expenses are now in that new capital number. Hopefully that makes sense to everybody. All right, so here's the full cycle in accounting. All right. The first step is that we're going to analyze the transactions. So, this goes back to LaShonda, invested $20,000 into her business. LaShonda purchased supplies on account. LaShonda purchased a building. She purchased desks and tables. Those are all the different transactions. And then we're going to create journal entries for those transactions. We're going to post those transactions. For number 4, prepare unadjusted trial balance. So this is going to be our first one before we do any of our adjusting entries. So we can talk about what chapter these are in. So this is all chapter 1, maybe 2, 1 and 2. This is chapter 3. So number 4 for prepare unadjusted trial balance. This is chapter 3. Adjustments. This is chapter 3. Prepare adjusted trial balance. Chapter 3. Prepare statements. This is going into chapter 4. And then these are chapter 4 as well. Okay. So when it says number 4, prepare an unadjusted trial balance, that's your chapter 3. Number 5, the adjustments, thus is your depreciation transactions. So these are transactions, they're not transactional. Something is not happening to make them, but you need to make these adjustments so the account balances are accurate. So you want to take care of your prepaid insurances, your prepaid rents, your unearned revenues, your depreciation. That's chapter 3. So those are going to be your adjusting entries. So that means that you had your original trial balance. Now we need to make adjustments for all those adjusting entries. And now you have your adjusted trial balance. After you do your adjusted trial balance, you create all of your financial statements. Once you create your financial statements, which is number 7, you're going to close your books, which is number 8. Number 8 is chapter 4, where we went through that entire process on closing the expenses and revenues. And then we're going to get to chapter 9, prepare post-closing trial balance. And then number 10 is what we're going to go over now. Make sense?
Yep.
Everybody okay with that? So, in this example, it says use the adjusted trial balance of Magic Company to prepare its closing entries. Erica, I'm not about to do any more work. They about to do all the work now.
Oh, okay.
This was me though.
You do the rest of it?
I did this.
Okay.
I did a lot of
Come
work.
back next week? Try next week? I can try next week.
No. You can see how smart they are.
She already knows how smart I am, so I get a TV.
Oh, goodness, great.
I'll probably come back just for the real lecture part, but just a little bit of what I see on you.
Okay. Cool. Oh, guess what? We can volunteer. Awesome is that?
I think because Matthew's the only guy, I think he should go first.
I just love how
I'm in first.
enthusiastic you are about volunteering. 7892. I gotta get my wallet number together. 7892. No, I'm gonna be rich. I think it's only like a couple thousand or something. I can use it. I'm gonna ask for a volunteer first. Anybody want to volunteer?
Oh, someone better volunteer.
And we're volunteering for?
To create the closing entries. The entry I just did up there.
I have faith in you, Nicole. Go ahead.
No, I'll help.
If you need me, I got you.
I'll do the, go ahead, Sue.
I'll go first. All right. Woo-hoo.
Okay.
Of course, we're here. Is that the good one?
I think it's the bad one.
Okay.
All right. So, are we gonna do anything with the cash account?
Well, no, because that one was gonna be carried over.
Yes.
To the next year.
Accounts receivable, same
Same
thing.
thing. Accounts payable.
Mm-hmm.
That's the same things we gotta pay it no matter what.
Yep.
Same with our notes and our capital.
And that's where we begin. Okay. So they do help us by pointing out which accounts are going to be impacted. So now we just need to remember our steps. So there were 4 steps. Well, what's the first one that we close out?
Close out our revenue.
Yep. So let's do our revenues. So then what accounts are going to be impacted? We have our new account,
Fees earned.
fees earned.
Okay.
Yep. But you're not allowed to talk. You know why you're not allowed
I
to
don't know
talk?
why.
Because you did not volunteer to go up to the board.
I'm offering my assistance.
Yep.
Okay. And that is minus plus.
And why is it a minus plus?
Because it is it's a revenue, it's a
Yep.
revenue.
Because it's a revenue account.
Okay. Okay. So, we earned 79,000. We wanna
Mhm.
close it out,
Mm-hmm.
okay?
Yep. And what's the other account impacted?
Their income summary,
Yep.
okay. And then, so we want to put that over here.
Why? I agree, but why?
Because we want to show that we have a zero, it's a credit.
Because it's a credit. Yep.
This is a debit,
Uh-huh.
okay.
Because
So
we
I-
already did our debit,
Yeah,
so now we have to do our credit.
okay.
Can you circle your debit for me so that we're clear? No, not on that side. On the fees earned.
Over here?
Yep.
This is debit. This is credit.
And just circle that. Yep. So that's our actual entry, right? 79,000 as a debit to fees earned, and 79,000 as a credit to income summary,
Right,
right?
okay. And the
So
next
go
one-
ahead and write your journal entry in.
Okay,
So these are all happening at year end. So 12/31 is your date.
fees earned.
Mm-hmm. income summary.
Oh, income.
So you're gonna do the exact same, except for one is, one is a debit and one is a credit, right?
Right,
So what goes first?
debit,
And what do you have first?
credit.
Perfect. All right, what's the next?
Salaries, expense.
So we took care of our revenues, now we're gonna take care of our expenses.
Expense. And that is an expense, that would be debit and credit. Okay, so we have 56,000. We want to credit it here, 50. So that is going to be a debit
I agree.
of 56,000.
The only thing that I would change up there is you have income summary as a plus minus,
Oh,
and I think it's a minus plus.
okay.
I mean, somebody could bet me money on it, and I probably would I might not take the bet, but yes, because in my mind, I'm
Right.
thinking the 79,000 is an increase because that's revenue. We're gonna decrease the expenses in order to come up with the net income, so. All right, so that is correct. I agree. I think your debits equal your credits. Yep. All right, so go ahead and create your journal entry. You gotta ask yourself what goes first
Debit.
and which one is the debit in this particular example.
Gonna be the income summary.
Yep, because you did,
Okay, I got it.
remember?
Yep.
So don't forget to ask yourself the easy questions. What goes first on the journal entry?
Then we use salary.
Okay, and looks like you got another expense up there.
Office expense.
Yep.
Credit. So our office expense was a debit of 8,000.
Mm-hmm.
And we want to credit our account 8,000.
Mm-hmm.
So we're gonna make that a debit on
Mm-hmm.
our income summary of 8,000.
Yep, so your debits equal your credits. Awesome, now you're gonna create your journal entry.
So we're gonna do our income summary first,
Mm-hmm. Why?
because it is a debit.
Correct.
Debit's always first.
Mm-hmm. On journal entries. I like it. Everybody comfortable with this? Hmm? Are you talking about the balance? Oh, we're not there yet. So all we did right now is close out our revenues and our expense. Oh, you do gotta close out your withdrawals. Go ahead and close out your withdrawals also.
Okay.
So that is step 1, step 2, and then step 3.
That's withdrawing, right?
Mm-hmm.
Okay.
like it.
Okay.
Let me take a look at it. All right, so drawing is a plus minus. It started off as $20,000 because we increased the account previously, and because it shows up there as a debit account balance, you want to do the credit to make it 0. So if we do a credit to drawing, we're going to do a debit to income summary. I perfectly agree with you.
So we're gonna do income summary first.
You're going to go all the way?
Yes.
Okay, so this is our final entry because we have 1, 2, 3. All right.
And then this is gonna be our major withdrawals.
Uh-huh. Okay. Now, Ms. Angela was saying that she was talking about the very last entry. So show me the steps. So step 1 was to close out revenue.
Yep.
So put a 1 next to the fees earned one. On the other side of
over
the,
here?
yeah. No. Like
Right.
at either end,
Right here?
outside of the table.
here?
Yeah. So that's 1. Step 2 was to close out our expenses. So group those 2. And the next one was 2 as well, because that's another expense, right? Step 3, we're going to close our drawing account. And then step 4, we're going to close all of that to what account? What is
Our
every
capital.
to our capital account? So you want to go ahead and create our entry for capital?
Okay. Capital account.
So the previous balance was
75,000.
C.
So that's a credit on the credit side.
So what are we going to add there?
We want to add these.
All of those. And so all of those are sitting in the income summary account, right?
Right. So we want to close this out.
Yep.
Okay. So I have to add these up. Look. 15. Was it 85,000? Is that right?
You trying to figure out the math?
Yeah.
What is it, 56,000?
Yeah, 56, 8,
Was-
and 20.
So 60, 76 plus 8.
84.
84?
Ooh,
Okay.
well, this is not a good situation.
Alright. So, I have 84,000, I want to make it 0.
Well, no, because it's not just the 84. Look at your credits.
Oh, my 79.
Yep. So you got to take that 79
Okay.
into consideration.
That's right, so I gotta take the 79 and minus the 84. So, he was $5,000 in the hole.
He was. I'm like, oh, poor guy. I said it to myself just now. He was. So where does the $5,000 balance sit? On the debit side or the credit side?
On debit.
Yep. So the $5,000 balance is on the debit side. So if it's on the debit side for income summary and you want to make the balance 0, what entry do you need to create?
Capital. But he's gonna be enough, wasn't it?
So you can't go to capital yet. First, get your balance of income summary.
Okay, my income summary, I take this 84, so it's 5,000.
Yes, but what side is it going to sit on? What side is your
Oh.
balance on?
It's gonna sit on the 5,000.
Yep. So go ahead and draw your line. Yep.
Okay, so that's there.
But
Okay.
is it in the middle or is it on the credit side or the debit side?
It's on the debit.
Okay, so draw your line down so we're clear. Yeah, we're just gonna make a
Okay.
yeah, that's our balance. Okay, so $5,000 is your balance, right? So in order to close it, what do you need to do with that $5,000?
I need to move it over here.
Yep.
Okay.
So now what's the balance?
0.
Yes. And now you were correct that your capital is gonna be the debit, so now your credits equal your debits. So did you increase your capital or decrease your capital?
Or decrease.
Yes, you did. So what's your new balance in capital?
5,000.
The balance.
Oh.
No, that 5,000 stays there, cause that was
Well,
correct.
the balance is 70,000.
Yes, it is. But you still need to,
Figures are here.
it does.
So
Now,
you got a credit of 70,000, is capital.
yes. So now you just need your journal entry for the last $5,000 entry that you made.
Okay. So,
Everybody okay with that? No, okay with that? I'm missing.
are we, what we missing?
I think whatever I'm missing, I should still be okay with that.
Okay, so, we got, that. So our income summary
Mm-hmm.
is
It's not our debit. I can tell you that. Which one is our credit?
a credit,
I'm sorry. Which one is our debit?
or debit,
Mm-hmm. For that $5,000 entry, which one is our debit?
or capital.
Yes. So we're gonna do our capital first, right? Because debits always go first,
Yeah.
and then income summary.
Okay. 70,000.
Mm-hmm. No, 5,000,
Oh,
right? Because our debits got to equal our credits.
oh, yeah.
That 70,000 is just the balance, but the entries are used. So we got to create those entries to get to those balances.
And this was 4.
Yep. So let's see. All right. So we got so they did the income summary as one entry. We just did it as two separate ones. There's our income summary. Oh, we joined ours together.
We didn't do expenses.
Why? We did do expenses. Why? Da, 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 da.
Our expenses.
Okay, hold on.
We had 2 expenses.
Oh, that's just because. Oh, I
We
see
had
why.
Salary, expense, and income.
Well, I see
Or
why.
profit.
It's because I put, this is fine now. I put the drawing into income summary already. The end result is the same though.
Okay.
Your net income is going to be the difference between the 79 and the 64. So he made money off of it, but because he took that drawing out, his capital decreased.
That's what I'm confused, and I'm like, we got.
So it's the same end result, but I see why they didn't include drawing in income summary, because drawing is not included in finding out net income. I don't know if it's gonna impact. It may impact your final. It may impact when you do the final. So just know that when you do the final, don't include the $20,000 drawing. You can create this account, this T table. You can put the drawing in here instead of
Okay.
in here. So
Okay.
so let me make it right. It wasn't you, it was me. Okay, so drawing, instead of being here, they wanna put it here, which is correct. Was it 20,000 or 2,000? 20,000? Okay, so,
It's 20, yeah.
okay, that's right. So this was our entry to close it out, this was actually our entry. So we wanna close it out to 0. The opposite side is this $20,000 is a debit to capital, and it just doesn't go here. So instead of 84,000, this would be, what is that, 64? Is that 64,000?
Yeah.
And then the difference between the two is 15,000?
Yeah.
Yeah, on the credit side. And then this entry would be 15,000. Cause the balance is this side, actually it's this side. So I'm gonna close this, I'm gonna do this side and this side. that's their 75 plus 15 minus 20. So 75 plus 15 minus 20. I know I completely screwed y'all up. I'm sorry. Call me. But that's correct. Drawing, your end result ends up being the same, but the journal entry does have to be this way. Because drawing is not a portion of income summary. Because income summary is basically your net income. Expenses does not impact your net income. It is a deduction from capital, but it does not impact net income. So this would be more correct. So the drawing account is what was incorrect. The actual account was right, but the offset should have been to capital, not to not to income summary, which makes perfect sense. So that's gonna make this entry 15,000 instead of the $5,000 we were looking at before. I joined two entries together. So then your $70,000 is still your balance. I'm gonna erase our journal entries, which you did correct. You did perfect. Yeah, say that again.
Okay, so she still has 70,000 in the capital.
Yeah, the capital balance stays the same because, of the formula. So owner's equity equals revenue minus expenses
It's not everything.
minus drawing plus capital. So the formula in total still stays the same. So that's why it's still $70,000 capital. You still gotta reduce it by the $20,000 drawing that we took out. Make sense? My online class is gonna die when they see that. All right, so honestly, the rest of this stuff you could just read through. There's no more transactional ones. I'm gonna pause this